There is a massive divide forming in between the US and China, one which continues to escalate. Even though they're meeting up to supposedly settle their differences, they still increase the amount of tariffs. It's nonsensical and doesn't resolve any issues. But have no fear, the stock market is now the longest bull market in history. Everything is awesome. And now back to reality. You came here for the truth, so let me unveil that for you. Today we're going to get into the real knowledge. I'm going to show you what's going on today. I'm reading the news and I'm smacking myself in the face trying to wake up out of this dream. But the dream never ends. The US and China impose fresh tariffs on each other's goods in the middle of trade talks aimed at averting the worsening conflict between the world's two biggest economies. They had been putting tariffs on each other. We saw this increasing and increasing. Both sides are just putting them all on, and it's increasing the tensions in between the two. And so finally they decide, let's sit down and talk. So that reassured the markets. Of course, the market's been heading up regardless because they just ignore it. But now today we have this issue of more tariffs. They're sitting down to talk and they put more tariffs on each other. It doesn't make any sense. It's as if they're going to battle. They decide, the two generals sit down and say, look, let's just resolve this. Let's talk. And then they pull out their swords. Why in the world would this ever happen? It doesn't make any sense. Both nations started levying the previously announced taxes on $16 billion worth of imports from the other country shortly after noon, Beijing time. China also said that it would lodge a complaint about the new American tariffs to the World Trade Organization. The US will collect an additional 25% in duties on Chinese imports ranging from motorcycles to steam turbines and railway cars. Chinese retaliation is going to have some other taxes on their other things. All right, so let's move on here. Don't want to spend too much time on this video today. One executive at a major U.S. manufacturer in China told Reuters the uncertainty about the trade conflict's duration was more damaging than the tariffs themselves because it made business planning difficult. And that's really important to understand. If you have any sort of turmoil, businesses start to grind to a halt. You have a lot of businesses where you have an inflationary environment, for example, where even though the business could open and potentially could make some money, they're unsure of what's going to happen tomorrow. So they might close their doors. Might be a big mistake in the end, but they're just uncertain. And uncertainty is always causing a problem. You need to be able to plan into the future. That's really the whole point of having a reserve currency. You know it's steady and stable. You use the reserve currency because I know that next year at this time, it's going to be around the same value. So let's use the reserve currency. But if that currency is moving all over the place or your currency is being devalued significantly in relation to that reserve currency, well then suddenly it doesn't make any more sense. So we have to have planning. We have to have all of these systems put in place to be able to stabilize things with a globalized world. But none of that makes any sense today. Okay? If the tariffs are in place for a long while, there would come to a point where the company would begin moving some sourcing production out of China, a process that would be irreversible for several years once set in motion. So we've got an issue here that it's going global right now. It's going to be a big problem, and this is just the beginning. Now, if they decide to settle it, there's no telling what they're going to do 3 months, 6 months from now. They might just reverse it. They might decide that, okay, well, we're just going to put tariffs on anywhere. We're going to do something else to make it happen, or we'll devalue our currency, or strengthen our currency. Who knows? There's a lot of things that they could do. Now, the PMI here, looking at this, has been declining, and that's not really a good thing. Now, while the US PMI in this case here is showing 55 on the scale, it's higher than some of the others. But what I would say to you right now is that throughout this short period of time, we have seen it decline, even though we're being told that all the numbers are good. That's all I'm trying to say from here. Sharp decline. The yuan has depreciated of late, sparking accusations of manipulation. Look, every country does it. If you can find me a country that does not manipulate their currency, please list it below. There will be no responses to that. Every country is manipulating. Maybe some do it a lot. Others do it just a little bit, but they have to always be manipulated. Look, even Switzerland manipulated the franc. They pegged it 120 to the euro because it was becoming too valuable. They purposely weakened it, and they made that publicly known. They said, no, don't. Everybody, don't put your money here. Well, we don't want our currency to be too strong because that's bad for exports, so we're going to weaken our currency. That's the logic today. I mean, it's unbelievable. But you don't have to worry, because the stock market right now is doing so well. In fact, it is the longest bull market in history in terms of number of days. Okay? It's doing just so well. I mean, it's wonderful. Congratulations to the Federal Reserve for everything you have done. You have contributed. In fact, you are the reason why the stock market has gone on for so long. 323% since March 9th, 2009, when the S&P hit 666. Wow. All right. So that has obviously risen ever since, and it's been doing so with the whole world actually declining, now globally down 14%. The US markets have been increasing, particularly the NASDAQ, and more specifically, you have the FANG Plus stocks, all right? So you compare that with what has happened leading up and from the 90s up until the year 2000, where it actually increased by 417%, but that was even more exaggerated in some ways than what we see today. We see that the dot-com boom, obviously a lot of these companies were not deserving for their, what they were given, the amount that they had risen in such a short period of time. The growth has definitely been more gradual here, but from 2017 and especially into 2018, things have really, really changed, and that doesn't show up here because we have quantitative easing, and that wasn't going on anywhere near what was happening in the 90s. Yes, we had interest rates that were coming down. They were making it easier. The lending restrictions were being loosened. I mean, there's a lot of reasons why it was increasing throughout the 90s, 10 years of persistent growth. However, you can see here that there has been a lot of intervention, and to say that is really just whitewashing it, because it has gone far, far beyond that. Okay, 2 more and then we're done. Longer, not stronger. The S&P 500's record bull market fails to keep pace with the 1990s surge. Hey, it's not over yet. We still have to go parabolic in our rides, so we're going to see how that all works out. I'm interested to see how far this will go before the next crash. It should be very interesting. I'm personally waiting. The fireworks are going to be fantastic. It's always a good thing to see fireworks. Everyone enjoys them. You go out, depending on where you live around the world. Maybe it's 4th of July. Maybe it's Canada Day. Maybe you go and see on Victoria Day, celebrating the Queen of Canada, celebrating the Queen of Australia, celebrating your anyway, I'm not even going to go there. That is what's happening. I don't know where it's going to lead to, but suddenly we're going to find out the truth. Now, if you've stayed to the end, I know that you're one of the real subscribers here, so we can get into the real truth. I bring it at the end simply because those other guys, they're not listening unless they're weird and they actually watch the whole video and they hate me, which is funny actually. If you look at the I know if you stayed this long, you actually care. If you read the comments, it's very, very unusual, particularly more recently, that there is a growing number of people who watch my videos regularly in order to leave negative comments and very specific comments. They actually watch the video. Like it's weird. It's just really weird. Sell signal that happened only 5 times before. Indicator based on ratio of stock prices to the price of a median new house. Interesting way to look at things. Okay. And this here shows us that, we have home prices that are just out of whack. We have stock prices that are out of whack. But here in this case, we're actually showing a high risk zone for stocks. Can you believe it? Very unusual, as far as I'm concerned. So that's a ratio of stock prices to the price of a median new house. And we are now back in the territory we saw throughout 2000 and a few times before. Okay, so it's approaching that level right now. It's exceeded it actually in the high risk area, but nobody really cares, obviously, because of the central bank intervention, and they believe that they will in fact continue to keep this going forever. Quote unquote, this time is different. They will never allow a crash, quote. There's all kinds of silly behaviors that I'm seeing, and we're gonna have to learn the hard way, I guess, yet again. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel. I do appreciate that very much. And last but not least, if you found this video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. This is the financial education you were not taught in schools. You could check them out at the link in the description. You're going to learn everything from the foundation to the history to the asset classes, how to profit from it, and then Global Economic Collapse fills in all the blanks, okay? It's a much smaller book. It's much simpler. Actually, both of them are very simple to read, but definitely a much shorter book. It's just over 100 pages, and that's why it's priced at $10. But when you look at it, it really fills in the blanks of a lot of the Money GPS, where I was getting into more of the structured way to learn things about the asset classes and so on, where this is going to talk about your tax incentives. We're going to talk about everything in there. You're going to learn so much. So check those out. Link is in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.